I'm just like dancing the entire time whenever that song comes on. Well, I'm here dancing with Kiwi. We're having a great time. And we're having an especially good time today because crypto is hot. It's looking pretty good. We had some interesting resistance levels being broken today. We had Bitcoin briefly above 21,000. It keeps trying to stay over it. We had Ethereum breaking some resistance at 1280, and things are looking quite good. I mean, crypto did not continue down despite the news that we got on Ethereum merge coming out soon. Oh, you got some echo. Oh no, there should be, hopefully the echo got a little bit better. There really shouldn't be much of an echo at this point, but the echo might have happened with the music because I had it too loud, if that's the case, Renee. But yeah, we're looking good. It's quite exciting. So we're going to be diving into the news. I always like to collect what I think are the most trending topics of the day to make sure that you stay informed. So welcome back. Let's go ahead and do that for you guys. Appreciate the support as always. Let's dive in. Oh, and happy Friday. We made it another week. Another week. Oh, no echo? Yeah, it should be better. Thank you, Evan Van Ness. Appreciate that. I think sound is good now. So yeah, we have, there we go. Ethereum looking really nice on the day. It was up over 9% yesterday, and today it's up another 5.3%. I'd like to think that Ethereum is leading the market right now. It is right next to Bitcoin at the center of so many things in this ecosystem, and seeing it look bullish day after day, and I don't know, things seem like it seems like some sort of shift to me that is different than any of the prior times when we've had these drop-offs at the end of these triangle pennants. Things seem on a macro level like we've hit a lot of the fear. We've already seen a lot of the selling, and that might be about to change. I could be completely wrong, so don't trade based on anything you hear here. But based on sentiment, it looks like we had hit some really nasty lows, and that might be about to reverse. I mean, one signal of that, of course, is Bitcoin, and it finally flipped neutral here on the overall technicals here on TradingView. It's been in strong sell territory for some time, and now it's looking nice. I'm glad you're back, William. Nice to see you. Some of the coins that are doing quite well today, Polygon, actually on the week up 27%. Another coin that did well is on the week is Uniswap. Uniswap was listed on Robinhood, so zero commission free trading, only your data being sold to high frequency traders. That's That's pretty much it. Just minding your trades and trying to get ahead of them, how they make their commission. But yeah, I mean, you could buy as much as you want there, and you're not going to pay a trading fee, which is really nice relative to other exchanges. Kind of reminds me of Binance and how they have zero fees now on their Bitcoin trades. That's something that I hadn't remarked upon on the show, but I think was of note. If we're really cataloging history here, we had a huge explosion in Bitcoin volumes last week because Binance opened up not just to their Binance US customers zero fee trading for Bitcoin trades. They opened that up eventually because it was so popular, I guess, with Binance US. They opened it up on a regular Binance platform, and that led to a surge in wash trading, where people were trading Bitcoin with themselves just to hit higher tiers, VIP tiers on Binance, and get access to lower fees on other coins. And so that just kind of was maddening. But I don't know, it might have helped change sentiment as well. Who knows? Maybe some of these algos that trade based on volume just took it at face value, since they can't really see exactly what's being written and understand it at a human level. I don't know what's going on there, but I think it's an interesting time to be in crypto. It's one of those times where we might be getting signs of what's to come by having paid attention during the bear market. It's just been quite nasty. Like I said, we did hit that point where I think it was just anger at crypto. It was beyond just denial or anything like that. We, on the Wall Street cheat sheet, you guys remember that, we were just in straight up hate crypto land. And so that generally that tends to be a good time historically to buy crypto. And yeah, while crypto has been tethered to risk assets, eventually that will decouple. That is likely to decouple, and it just happens time and time again. It's not always trading one for one with risk assets, and often in early history it never did at all. So it would be nice to see that change. So we actually have an out from the Fed frickin' dollar in this entire system. You know what I mean? There are fees on Robinhood. They just aren't disclosed. That's fair, Brian Blockchain. That would be kind of illegal, but I wouldn't be too surprised. ETH merge around the corner too. Yep, it is right around the corner. Along with this talk of prices, however, in regards to ETH, and I think it's driven a lot by the merge news coming out around September 19th that we remarked yesterday. I saw this. This was posted by Light Crypto. I saw it right before I went live here, but it was posted at 12:43, so about 2 hours ago. He said, ETH USD, third tap of resistance, no sign of derivatives overheating. And ask walls, these walls on a number of exchanges are getting out of the way. Think it's good to send. I think it's good to send now too. If we send it from here, I think a lot of people who are waiting on the sidelines to buy when prices get lower might be pretty upset. So there could be a lot of FOMO chasing on the way up. As referenced here by, for example, this survey that was done by Wu Blockchain. They said in a survey of more than 2,200 people conducted in popular Chinese crypto community on Weibo, 8% of the voters believe that Bitcoin and Ethereum could be buy the dip when the price reached $18,000 for Bitcoin and $1,000 for ETH. I guess again, because we've already hit those points. 26% will buy in the $15,000 to $800 region that we haven't really seen this market, not bull market, this cycle. And 40%, so the vast amount, are seeking to buy in when Bitcoin hits $10,000. So I don't know where they're expecting Bitcoin to definitely hit $10,000. It's a possibility, as we're hearing, at least from these surveys. But I think these surveys are really indicators you want to trade against. You want to usually be against the herd, and you want to be ahead of them. But yeah, 40% would look to buy in at $10,000 Bitcoin and $500 Ethereum. Doesn't mean we're going to be getting there. It just means that's when people are waiting to buy back in. And naturally, they're going to be thinking like that when we've just seen down and down and down. But if things do reverse and we start moving up and up again, and fears around inflation prints, the sentiment around that starts to change from, sell risk assets and everything else because of inflation and what the Fed is going to do, and the narrative eventually becomes, the Fed is going to have to be fighting instead recession, depression, and I think that's what I think a lot of markets are trying to get ahead. Like you see with the bond market, they're trying to front run with where the Fed is going to be at. And of course, we're going to have quicker moves in the more volatile assets. For example, like we talked about yesterday, crypto tends to be leading the pack. So I imagine it could start up very well. Why not start a bull market before everything else? And we're 20 months away from the halvening. So still a ways off, but we do see that markets pick up ahead of the halvening. Not necessarily what's going to happen, but just wanted to give you some food for thought there. And in regards to the merge, yeah, that does look, and this was posted on ETH Finance, it does look like it's going to be happening around that date. It's not necessarily going to be happening definitely on September 19th. But yeah, Micron too had asked, it's been a busy week at work, so I'm a bit out of the loop. How solid is the September 19th date? And luckily, we had some info here from High Flyer, who did attend the all developers call for Ethereum yesterday, where we first started hearing about that date. And he reminded us what Tim Bako had to say. He said that this date of September 19th is something more like the solidness of a burrata. Solidness of a burrata, not aged cheddar. I mean, or I'm sorry. So the testnet fork, the go early testnet that happens before the final mainnet merge, that is somewhat like aged cheddar, he had said, not Parmesan. So not as hard as Parmesan, but aged cheddar, and that the official mainnet fork is more of a burrata. So soft. It's pretty soft, but it's not completely soft because you do have some hard there in the burrata. It's like a buttery, creamy inside, really, with kind of gelatinous outside, I guess you could say. So I would give it a plus, or I would not minus 2 weeks. I imagine they wouldn't push ahead the date, but maybe plus 2 weeks around that date. But things are looking good, and I think that's going to present upside volatility for Ethereum. As again, it's just more difficult to deny whether this is happening or not. And regardless of what you're hearing, that the influencers are completely ignoring Ethereum, I don't think so. I just think they might be out of the market and not paying attention. They will be forced to pay attention to what they already know, which is that we're going to be having a huge supply reduction in Ethereum. Same level of demand, if not growing demand, could push these prices much higher, especially over the longer term. So people trying to get into that, and I think those closer to the information, people who follow this closely, they're not on Weibo, waiting for certain price levels before paying attention. Those are going to be the big beneficiaries of this. Personally, I did buy the dip with what little I have left. I did go and I decided to follow this dollar cost average thing, which is apparently buying a certain amount over a certain period of time. If I want to buy, for example, 10 grand, I buy $1,000 a week over 10 weeks. And that being a good way to get exposure to this, because you'll save yourself from the downside, and you won't be completely out of the boat and miss the upside that with crypto we know can be pretty extreme and creates huge amounts of FOMO. We've already had a massive amount of selling, massive amount of liquidation. I think a big question is how much of that was parked, for example, in Celsius and Voyager, and what kind of sour taste was left in these retailers' mouths, retail depositors' mouths, where they don't want to touch crypto at all, or maybe a lot of what they had investable was parked there, they've lost out, and now they just don't want to get involved, but are forced to buy in at higher and higher levels as the price starts to creep higher after some of these liquidations. I don't know what the answer to that. But we still see that there's at least some level of interest, it looks like to me, in not just NFTs, but cryptos overall. But specifically looking at NFTs here, these crypto punks continue to be bought out, especially these that look like apes, because they're a way to buy crypto, the Yacht 8 Club apes on the crypto punks, the OG NFTs, the original NFTs that were built on Ethereum here, that really preceded this entire boom that we've seen. So if you're able to get one of these apes minted for yourself out of one of these 10,000 crypto punks that were originally issued, damn, you're sitting on quite a bit of profit, especially if you held on to it. Although they have traded hands a lot, they're some of the most popular ones. So this had been posted by Watcher Guru on Twitter. CryptoPunk 4156 NFT has been sold for 2,691 ETH, about $3.3 million. So I mean, obviously that led to a lot of speculation, and again, the same calls that we hear, oh, this is just one person trading with themselves with another account, giving themselves $3.3 million to create an artificial price floor, so that even if somebody buys it for half the price, for, I don't know, $1.6 million, they feel like they got a bargain. And I don't know that that is actually the case, because one confirmation here on Twitter had tweeted that just actually a couple of hours before this by Watcher Guru, that they had scooped up that very same punk number 4156 with a new piece of digital art they created themselves, really. I don't know if you can call it art, but that's what passes for art these days on NFT. Hey, it works for me. I mean, it doesn't look that bad. We even got some laser eyes there. They forgot to put the laser eyes in the right part, but I guess it works. It's an Ethereum thing, not a Bitcoin thing. So we don't need to put the laser eyes right in the middle of the eye. We can just stick it on the head, because unicorn, right? That's what Ethereum's about, unicorns. Just being joking here. But yeah, we can see that this is quite a popular punk. So I don't know if it's being wash traded at all. It definitely looks like it's a legitimate purchase here. You can see that the most recent sell had been for $10.26 million prior to this sell at $3.31 million. So why have a $7 million loss? I mean, it just seems sketchy if it was fake and wash traded, but I suppose anything's possible. To me, I'm gonna go like it looks like a legitimate purchase. Let me know what you guys think about that. So the RIAA, Big Music Industry Group, has been upset with some of these NFTs. So they went over to OpenSea, where many of these NFTs are traded, and they asked for a takedown request on some of these listings that were linked to RIAA and some executives at this music group. So, for example, ENS domains, these are .eth domains. You can buy and trade different domains that could represent pretty much anything. But it looks like they had minted a few ENS domains that were linked to, for example, where is it here? Like Atlantic Records.eth, Virgin Records.eth, Universal Music.eth, Republic Records.eth, Warner Music. We all know that the music industry is one of the most predatory groups out there, along with Hollywood, believe it or not. So I've become a little bit more disheartened with my own career choice. I came to Hollywood and I learned a lot more. I've learned about how the industry actually works. So if you don't know someone, if you're not related to anyone in the industry, it's very unlikely you're going to get in. If you even find any roles for acting out here or within music, really you have to have an in. I mean, especially now with the proliferance of algorithms and musical engineering, it's just unlikely that you're going to be making it. So many of the homeless population here in Los Angeles have faced the predatory industries here and not lived to survive that you might encounter yourself. It's just a place that tries to come off as very glamorous to attract talent to exploit. And it's just kind of a weird business model. And they are some of the ones who are the quickest to file lawsuits and take down requests, especially the music groups out here. So, I mean, it's not surprise really that they're going after these ENS domains that are being traded on OpenSea. So what they said was the ENS domain names infringe RIAAs or our members' trademarks as they cause dilution, confusion, and or tarnishment of these trademarks. The sale of these ENS domain names is also actionable under the Lanham Act. In addition, the sale of ENS domain names that contain the names of executives at RIAA or other member companies violate the Anti-Cyber Squatting Consumer Protection Act, the music group informed the platform. So these auctions were removed. If you try to go over to OpenSea, it's going to tell you the item you tried to visit is no longer available on OpenSea. It will not be visible or accessible to anyone browsing the marketplace. So kind of sucks if you had minted these for some amount of money, or if you have a name that's very similar, as others are pointing out. If you have a name like some of these names, for example, Ron Perry, maybe your name is Ron Perry too. It sucks that you won't be able to purchase that on OpenSea and you have no association with RIAA or one of these music groups at all. How come they get the? I guess it's true. It's that OpenSea, considering they announced yesterday 20% of their staff, they don't want to have to deal with any lawsuits or go forward with anything. So they're just going ahead and granting these sorts of requests wantonly and completely. So I think that's some sort of problem that needs to be discussed. But I mean, that's what you face when you have these centralized platforms, that they can do whatever the heck they feel like. Hey, thank you so much, Vic. I appreciate that. What's going on here with the chat? Evan Van Ness, who has been telling everyone for over a month that it is scheduled for mid to late September. Yeah, follow Evan Van Ness. Evan Van Ness is right at the front of everything. So definitely anything Evan Van Ness says on Twitter, I tend to at least read. And he has really some of the most poignant information. And he's there at the calls and he's paying attention to it. He's someone I reference for a lot of why I even talk on the show. I try to read as much as possible. I read through Bitcoin markets, ETH finance, the entire threads. I follow the rabbit holes. I go on Twitter and I follow those rabbit holes. But I find there's just really not that much on Twitter these days for the most part. Just a few things and people commenting a lot on those things. But there's not a great amount of quality that takes place there or a great amount of sources that are posted. It's kind of a strange place. It's unfortunate that's where a lot of the banter happens. But yeah, Evan is someone that I frequently have to look through to see what's going on. So yeah, definitely check out Evan. That's important. They get it right the first time when dealing with money. Oh yeah, in regards to all the tests taking place on Ethereum. Absolutely. They could ship it this week if there was minor attacks. I've heard about all sorts of other attacks. Like, what was this other attack that was being discussed on ETH Finance? I hadn't I hadn't heard about that one before. That apparently there are entities out there that could be. There was a paper that had been written that could be following all the IP addresses of the validators for Ethereum 2.0 to target them for attacks when ETH 2.0 launches, whether that means causing their internet to go down, or they could have already, for example, created vulnerabilities within devices, and they're just ready to launch attacks on the validators for ETH2 because they know public information that these validators are putting out, especially if they're not using VPNs or something to hide their IPs. Yeah, there's a lot of attack vectors that have needed to be discussed and explored before launching these sorts of things. And I can't claim to know that many of them completely myself, but there are some out there you might not even know about. I don't think the right word is zero-day exploit, but yeah, it's best to wait and to resolve as many as possible. So it's good that Ethereum has waited this long, in my opinion. So continuing on, yeah, in reference to Celsius, I know I wasn't going to talk about it that much, but I can't help it. This is just one of the main focal points of what's going on with crypto, and even me specifically, just following the drama around all of this since I was exposed myself. So Celsius CEO Mashinsky, this was posted by Kadim. He went into the first statements that we've gotten really from Alex Mashinsky, and this was in regards to the bankruptcy that we know now that Celsius is going through, that they've officially voluntarily filed of Chapter 11. So Celsius CEO Mashinsky, Kadim went ahead and went through a lot of that and summed up some important details. I'm going to go through that because I think it's important. There's a good piece of information that I think if you're following this, you're going to want to know. It's just interesting stuff. Celsius CEO Mashinsky first extended statement since freezing customer funds last month within that. Before we dive into this, I did just skip into section 5 here, which I think is just downright nasty. It goes to show that, as Simon Dixon of Bank to the Future and others are pointing out, that Celsius did not really care about the depositors. They didn't put the average consumer first. They're putting themselves first, especially by the way that they're doing this, by filing for Chapter 11 rather than other means that they could have had to put depositors first, to make sure the depositors are first in line to get their money. Rather, they're going to make sure that they take care of themselves, the executives, the employees first. And I mean, we're really at the bottom here in terms of getting some cash back. But check this out, Section 5, that they put right there at the top of this bankruptcy form declaration by Alex Mashinsky. So Section 5, the terms of use at the form that form the basis of the contract between Celsius and its users explicitly state that in exchange for the opportunity to earn rewards on the assets, users transfer all right and title of their crypto assets to Celsius, including ownership rights and the right to pledge, repledge, hypothecate, rehypothecate, sell, lend, or otherwise transfer or use any amount of such crypto, whether separately or together with other property, for any period of time and without retaining in Celsius's possession or control a like amount of crypto or any other monies or assets, and to use or invest such crypto in Celsius's full discretion. A version of this statement saying that they're allowed to rape you as soon as you deposit your money. They can do whatever the heck they want to whenever they feel like it. It's theirs or not theirs. At that point, a version of this statement has been in every version of Celsius's terms of use since 2018. And since 2019, the company has made it clear that it might experience cyber attacks, extreme market conditions, or other operational or technical difficulties which could result in immediate halt of transactions, either temporary or permanently. Yeah, I read that. I had used Celsius over the years and withdrawn many times. Of course, there were all sorts of solvency issues that began to spring up as the months and years went along with them in operation. So the amount of digital assets on the company, they had said, company's platform grew faster than the company was prepared to deploy. As a result, the company made what in hindsight proved to be certain poor asset deployment decisions. They have a $1.2 billion hole in their balance sheet. We hadn't exactly looked at the chart, but you can see there, their biggest liability that they have, debt, is user liabilities. About 4.72 million times $10 million, it says here, times 10 million US dollars. So that's their biggest amount of liabilities. They have about $210 million sell liabilities, custody liabilities, about 180. So overall, they have $1.2 billion more in liabilities versus what they have in their assets. As you can see, 170 million in cash, 1,750, 1.75 billion, they say, in crypto assets, Custody assets, 180 million. Sell token, $600 million in sell token, which apparently is still staying relatively flat. People have been trying to buy up the sell token to cause shorts to get wrecked, to make it so that Celsius can basically feel like they have more money because they hold so much Celsius, and that way they can pay back depositors by dumping those Celsius tokens on whatever marketplaces they can possibly sell those tokens on. I don't understand the logic of that, but that's something that started playing out in that month after withdrawals were dropped, almost soon after, to try to help Celsius get back on their feet, although obviously that hasn't helped very much. Celsius only raised $600 million last year. Apparently they lied. They had said that they raised $750 million. According to this very old school chart, the run on Celsius began in about March of this year. So you can see this purple line, which is, you look at the amount of deposits, of inflows versus, that's in the green, versus the outflows in red. They had officially switched where you started having negative. You had more leaving the platform rather than coming in around March of 2022. So that's the purple line, taking the average of both, or looking at both. Once cryptocurrency is transferred to Celsius, yeah, we already looked at that. One of the things that Celsius did with a huge chunk of its customers' funds was invest in its own mining operation. I actually think this is a pretty good thing, and this is apparently what's going to be getting them out of their hole, which is the big one here. Through a $750 million credit line that they took, out of themselves, out of their customers' funds that they hope to pay back. $576 million out of $750 million was outstanding as of May. So most of that still outstanding. So yeah, of note, currently their mining company that they created owns 80,850 mining rigs with 43,632 of them in operation. And prior to the petition date, had an investment plan to operate approximately 120,000 rigs by the end of this year, 2022. Mining is currently generating approximately 14.2 Bitcoins per day. Not too bad for the past 7 days, and generated a total of 3,114 Bitcoin during 2021. In 2022, it is projecting to generate 10,118 Bitcoin. For 2023, assuming at least 110,000 rigs will be online, mining is projecting to generate approximately 15,000 Bitcoin. So it looks like they're doubling down really on their mining operations above all. It looks like they're trying to move away from their old business model. Obviously, it hasn't worked, to one that might potentially generate them more profits, especially as Bitcoin climbs in value in the future. I think one of their only good investments is probably in mining here. On a separate exchange, the FTX had an additional $108 million loan collateralized by $403 million in digital assets. So basically, they took out a loan from FTX exchange. Surely you've been hearing of them. They're the ones that are granting loans and they're trying to bail out the whole industry. Mostly we hear talk from like Binance and from the Tron guy. I don't think they've done very much. But we do have Sam Bankman-Fried of FTX out here really having conversations with many companies from what we've seen and trying to bail out the space, even if it causes a loss. I think there was a Real Vision interview that took place between Raoul Pal. I don't know if it was, I believe it was Raoul Pal himself, the founder of Real Vision, and Sam Bankman-Fried. But anyway, Sam Bankman-Fried basically said he feels like a certain sense of responsibility to stop even more contagion from happening, although he doesn't know that we've seen the full amount of downside yet in these markets. But anyway, FTX would only loan Mashinsky if they covered the loan 4 times over, which is why you see the loan was collateralized. This $108 million loan that Celsius took out was collateralized by $403 million in digital assets total, so 4 times over. Pretty insane, but we do know that FTX hasn't really trusted Celsius, and they were among the first to report of a $2 billion actual hole in the balance sheet that they noted before any of this came out. I think we talked about that last week. I don't know, it's crypto time. We lose track of it. So another big chunk of customer funds that are still illiquid from Celsius are locked up. So this is the STF. So this Lido, it's a platform for staking ETH for Ethereum 2.0. So this Lido staked ETH, or STF, which has been moving away from the Ethereum price. But actually it seems to be today, by the way. If you've been following that, it looks like it's catching up here. We have it up 6.2% on the day, up to 12.14, while we right now have Ethereum at 6.1%. Oh, well, yeah, so it's the ratio is getting a little bit better. It was a better ratio before of catching up. But yeah, we have Ethereum at 12.54 and Lido at 12.14. So not too far off. You could be getting a deal there right now, especially as more trust comes out that Lido can successfully accomplish this merge themselves and that the merge is happening. And it does seem to be coming up very close. And other factors, of course, as well. But anyway, they have 467 million of their ETH locked up right now, and it can't be touched. So if ETH soars, maybe it does hit $20,000 by the end of the year. I mean, that would be nice, especially if we could withdraw some of those funds without causing huge amounts of price. But anyway, if Celsius could, they would probably have quite a bit back of what they owe customers. I guess that's another thing. They could have money coming in from their ETH. They could have money coming in from mining. And their plan is to restructure. It's not to completely go insolvent. So there is a little bit of good news, I suppose. Although they're, again, not putting depositors first, it seems. I mean, it's just obvious. So they would have, I guess they wouldn't have wanted to cause a bank run on themselves, but they could have been a little bit less marketing their bullshit, you know what I'm saying, to get more people to deposit as we got to the end stages here with them before pausing withdrawals. Anyway, last year, Mashinsky insisted to Kadim here, who made this thread, and to Josh C.K. Oliver that Celsius did not trade customer funds. Right. We do not trade in any circumstance, take customer assets and buy more of them or sell them because that's not our business. Although it does seem like in this sworn court filing, that was a lie. So that was a lie. They do cash and carry. They do market making. They do swing trading. They do funding. You know, when you deposit funds like we used to back in the day on Poloniex, and for lending out funds to the exchange to allow other people to trade, you get a small little fee. They did that. They did spot trading. So they obviously did trading with customer funds. The filing refers again to certain asset deployment decisions were made in the midst of its unexpected asset growth, and hindsight proved problematic, like we said before. But there's no detail on what these bad bets were. Yeah, they're not being super specific yet on the exchange deployments. Maybe Kefi and Jason Stone, you remember them in this story. Maybe they just haven't told them completely what they had to do to generate profits. I don't know. So Celsius, yeah, we talked about that as well this week. Celsius lost 35,000 ETH on Stakehound. So Stakehound apparently misplaced the keys back in 2021 to over 38,000 Ethereum tokens. This had something to do with their third-party crypto custody provider Fireblocks, and Stakehound is suing Fireblocks right now. But of those 38,000 ETH that were lost, 35,000 of them, so most of them belonged to Celsius. So Celsius has just been having bad luck after bad luck here. They never really announced that at all, which is where the drama came out this week, though that is old news. Celsius borrowed from a private lending platform that lost the collateral Celsius pledged, leaving it $509 million in the hole. So they couldn't get back any of that money in the hole as of mid-2021. It's still now $439 billion in the hole. Apparently, this lender has been making timely payments, but only around the excess of $5 million per month. It's come out now, and you'll see at the bottom of this thread that the company that they took out this loan from was Equity First, they're called. Despite these losses, let me just skip that anyway. The company believes that it would have likely succeeded in the near future if the market had remained relatively stable. That's such a weird thing to say. It's not even if the market goes up, because we know that in the beginning of the year, they lost money because of how they were managing funds and using DeFi. They, in fact, lost money because they did not seem to understand the principles of impermanence loss. So even though the market was going up, they lost money. Market go down, they lose money. So the only way that they seem to be profitable is if the market stayed flat or under whatever exact conditions Celsius had hoped, which is just doesn't seem like very good risk management at all from a company that was so proud of how they manage user funds. Celsius lost $15.8 million on Terra Luna, but to their credit, far less than some others in crypto. So they didn't do that bad on that. They also didn't lose that much on the Three Arrows Capital incident. They only lost $40 million from Three Arrows Capital, which again, they just are nowhere to be seen, the founders. It appears that they've disappeared, and they were originally participating in bankruptcy proceedings, but now it's just they've gone AWOL. They've gone MIA, missing in action. I mean, I'm hopeful that some creditors get money back, but Three Arrows Capital owes the money in the entire world to everyone, and so I don't know. I don't know what they had even planned to do. But yeah, Celsius only lost $40 million on that, so they took a section there during in this. I'm sure that this wasn't just written by Alex Mashinsky. I'm sure that this was written by his lawyers and his team and reviewed maybe by him. But for the most part, I'm sure this was written by his team. But yeah, it took a moment to bash on Voyager, BlockFi, Blockchain, .com, and others. Oh, whatever. Anyway, Mashinsky then goes on to blame misleading media coverage for accelerating withdrawals from Celsius in May. So this is what started to happen, really, where people en masse started withdrawing huge amounts. It wasn't really in March where the huge amount of the bank run started to take place. It was in May, if you had been following this drama. So misleading media coverage. Yeah, that's why proof of keys happened. That's why people withdraw from exchanges, to test these platforms to see if the money's really there. Although we should know from the very business model of these companies that the money's not there. Just like it's likely not there for BlockFi and it's likely not there for Nexo, others you might want to be careful of. It was obviously not really going to be there if everybody tried to withdraw at the same time from Celsius, and you were completely deluded if you thought that was going to be the case. But unfortunately, as they say here, it did cause this bank run that caused them to go under. As Celsius attempted to weather the crypto apocalypse storm, it began to receive increased negative media attention. That's what happens in bear markets. You're going to get picked on. It doesn't matter who you are. A number of such stories were false and misleading. I guess some were true. Immediately after the Luna collapse, social media spread misinformation regarding a commitment by Celsius and others to a possible Luna bailout, followed by statements that Celsius had lost hundreds of millions of dollars on Luna. No, we didn't lose that much on Luna, though, but we lost everybody else's funds on the platform. These rumors made users wary of Celsius's platform and contributed to accelerated withdrawals of over $1 billion from the platform over 5 days in May 2022, at a time when distrust of cryptocurrency was at an all-time high. So this was the arrow to the knee that brought down Celsius completely. Tether's loan of USDT to Celsius had 841 million. So Tether did not trust Celsius at all either. So that's what this is about. Tether's loan of USD Tether to Celsius had $841 million outstanding. The mutually agreed liquidation of the load. Mutually agreed. Yeah, let's just liquidate it. Let's liquidate it. Yeah, it's mutual. Nah, son. This is Tether trying to call you out and saying we want our money back ASAP. So when the liquidation was tried and true, when it was done, it turns out that Celsius ended up losing $97 million in the process. So they lost money on that loan. Terrible. Celsius had an initial special committee to handling its restructure, but replaced it and its lawyers just after 11 days. So if you've been following the show since the relaunch, we've covered that. It was just kind of sus. They didn't like that committee, so they switched to this committee. Mashinsky's response to the lawsuit by KeyFi and Jason Stone alleged that Celsius was a Ponzi scheme, calling it one example of the way in which others are attempting to generate distrust. They're making fun at us among the company's users and the general public. The company strongly disagrees with the allegations of this raised in the KeyFi complaint and intends to vigorously defend itself. So it doesn't agree that it's a Ponzi scheme, and that's how they're trying to word themselves. Of course they wouldn't, but man, are they going to have to waste money on lawsuits. The plan, Mashinsky wants to use Celsius's mining operations to generate enough Bitcoin to address its current cryptocurrency deficits. So to bridge the gap in their balance sheet, assets and liabilities, the company plans to engage with all constituencies, including the official, so this is the game plan for Celsius, the official committee of unsecured creditors, which will likely include most users, in a productive dialogue with the hope of building consensus around the debtor's potential Chapter 11 plan of reorganization, ultimately a transaction that will maximize the value of the company's business for the benefit of the company's creditors. Okay, but there's different tiers to creditors again. One way the debtors intend to achieve this goal is by using the Bitcoin minted by mining to address its current cryptocurrency deficit. May mining save us all. The debtors are aiming to file a plan that will provide users with choices and enable Celsius to return to normal operations. I don't think they'll ever go back to normal operations. Is there ever really a new normal? Haven't we been through this story before en masse on this planet? Anyway, to fund planned recoveries, the company may sell one or more of its assets and or consider an investment from third-party strategic or financial investors in exchange for equity in a reorganized Celsius. It seems to me that Celsius has a lot of work to do to establish credibility. So we got to take out this, to get this kind of trust, to get these loans, but I don't know. They've talked a big game before. We'll see how they try to manage this one. So a final nugget buried way down at the bottom of the filing. They kicked out their CFO, who was just appointed in February, Rod Bolger, who had joined from the Royal Bank of Canada. He's been ousted. So that's pretty much it. Yeah, they go into the bottom that it was equity first here. The company, yeah, right here, they had taken out the loan, and that company basically couldn't get back the money back to Celsius and so on. So yeah, just troubling times, and there's other lawsuits that continue to come out for Celsius. I mean, you just Google Celsius lawsuit every single day, and you're probably gonna find a few new lawsuits. So here's one: Taylor Goins individually on behalf, so a class action lawsuit. I guess you could participate if you feel like in the District of New Jersey against all others similarly situated against Celsius, and not just Celsius. He's also suing KeyFi here along. So KeyFi is suing Celsius for being a Ponzi scheme, but Celsius and KeyFi are being sued for having misappropriated, misused customer funds. Again, just going to have to be a lot of money that's going to be going into these litigations. Here's another one. Rosen Law Firm, a global investor rights law firm, announces the filing. This was just like 2 hours ago. The filing of a class action lawsuit on behalf of purchasers of Celsius financial products, including Celsius tokens, earn rewards, high interest accounts, and or Celsius loan products between February 9th, 2018 and June 13th, 2022. So it seems nice. It sounds like, oh, yay, we're going to join this class action lawsuit and we're going to get our money back. But everyone wants money now from Celsius, and there's no money there. There's no money there. May Bitcoin mining save us all. Anyway, yeah, so some of the FUD around Nexo today, another platform that operates similarly to Celsius. A lot of red flags around that as well. They were the ones who had participated, for example, in causing a short selling crisis to cause a huge dump of Chainlink token. If you remember, they were operating as a group that created this report that created a lot of FUD. And it turns out it was Nexo the whole time. Yeah. So Nexo is still operating for the most part as they have. So others are saying, wow, the worst of the platforms. Crypto.com, one of the worst of the platforms. They have the arena here in Los Angeles. They're operating just fine. We have Celsius and BlockFi going under, and Voyager. I don't know. Maybe they won't be just fine. Just another, maybe it feels like daily reminder just to be careful where you have your funds parked. But again, everyone is getting the magnifying glass put on them right now, whether it's Gemini and their links to Genesis Trading, for example, or whether it's Nexo. Vance Spencer, he runs a fund. He says he's a co-founder of a fund there. He said, if you have money on Nexo, now is the time to consider withdrawing. Does he know something the rest of us don't know? I don't know. I can't seem to find any sort of proof. But that's the drama of the day, and I do like to present to you the drama and or rumors just in case, because just like with Celsius, it was the rumors, it was the drama that would have led to you getting your funds out before the herd tried to do so. I mean, we did hear the rumors before they went under, and those proved to be true. Some rumors are true in crypto and some are not. I'm just trying to show you guys both sides. But yeah, he's a co-founder of High Framework. Yeah, I don't know the guy. President Putin has apparently signed another law. He's banned digital assets. These countries can do whatever the heck they want to. Ultimately, crypto doesn't care what regulations you have in place. As long as somebody's running a node, as long as there's demand for these things, as long as governments continue to operate as they do, and we don't live in a strictly totalitarian global level, which maybe they want us to move to, but as long as we can still operate somewhat under the guise of freedom and free markets and being able to operate on ISPs, then I think cryptos are going to be all right. I do feel like we're going to be all right, and they will not be going to zero. But anyway, it seems like Vladimir Putin wants them to go to zero. He doesn't want them to be used. He signed a law that was last passed by lower parliament. You need to have both lower and half, and the executive office, the president signing to have something go into law in Russia. It's been signed into law today by President Putin over there against digital financial assets and their use as a means of payment inside the country to, of course, keep the ruble having whatever demand that it still has. The ruble, which others are saying is actually rubble, is a shitcoin of the highest degree, and there is no demand for ruble outside of Russia, which is why it looks strong relative to the U.S. dollar. But anyway, this is going to be it's going to be this bill is going to be outlawing the exchange of DFAs. It will be going into place. So these digital financial assets for transferring of goods, perform work, rendered services, although it might allow for the use under certain exemptions that could take place. And they are still apparently trying to have maybe the legalization of some smaller scale crypto payments in regards to foreign trade because of the sanctions that are taking place in Russia. That's been some other news that's come out. It's been getting some support in Moscow. And this new legislation will go into force 10 days after publication in the Russia's government gazette. This is just some of the news. Of course, I have to cover it, but probably will not affect most people these days anyway, unless you're trying to use or promote the use of cryptocurrencies for payments, which is, I think, what the whole world should do at the same time. But it's like a giant Byzantine general problem. How do we get everybody at the same time to use Ether for payments? I don't know. I don't know, Satoshi, come back and help us all. Some are saying, for example, Satoshi is the smartest out of the rest of us because he put his Bitcoin into real deep cold storage if he is in fact Hal Finney, who is one of the suspected Satoshi Nakamoto's and someone who is cryogenically frozen. So he was the OG real deep cold storage, and he might be unfrozen one day to come back and teach us the great lessons that he's learned in his deep sleep. I don't know. May Satoshi come back sooner than later. Crypto's getting scary. Anyway, yeah, so there's some other laws that the Russian parliament is currently considering, two other bills related to digital assets to wrap up on that news. One, to regulate crypto miners' activities in the countries, to have them register as sole proprietors or self-employed so the government can get theirs. And another one on digital currency, proposing requirements for firms, this is according to Cointelegraph.com, proposing requirements for firms handling digital asset transactions, including licensing, disclosures about risks and privacy. Okay. All right. Reminds me of the SEC. Anyway, we'll finish with our quote of the day, as we do here on Crypto's News. I thought this one stood out to me today by Rabindranath Tagore. I think it relates to what we're doing here with cryptocurrencies and obviously to many other factors in life. We gain freedom when we have paid the full price. Yeah, I think that applies to the independence of this country I'm at, the United States. It applies, of course, to slavery. And it could have applied, I think, to financial slavery just as much, which is what we all exist under and we're hoping to free ourselves from in this growing fringe movement on digital assets that just cannot be ignored by anyone anymore. And it's been a wild ride to see it ignored and to have been a participant and to watch it grow up into the fight us phase. And it's a beautiful thing, honestly, to be a part of it, which is why dollar cost averaged whatever little I could today, just to be a part of the movement, because I have like basically nothing left. But I want to be a part of this movement because I understand how important and impactful it is, and we just have to be able to weather the storms. Time and time have shown if you're able to weather the roughest periods, you're again the biggest benefactors of this. And I hope that you are some of the biggest benefactors as well by staying tuned in to Crypto's News. Let's continue to hit the like if you enjoy the show. Really appreciate every single one, all the love that you guys continue to do, whether it's by sharing on Twitter, some have done that, whether it's just reaching out to me to say, hey, welcome back, we missed you. That makes me feel real good, and it keeps me coming out. And of course, our supporters on Patreon, most of all, because I'm barely making a buck. If it wasn't thanks to them, I wouldn't be making anything at all. And yeah, trying to feed myself. It's a bear market, all right? And I refuse to go into hibernation anymore. We're going to be coming back, and we're going to have the bear acting like a bull. That's the plan. Take care, everyone. Much love. Thank you for joining me live, anyone who was here, and stay cryptic. Peace.